Good afternoon, everyone from Nairobi. I hope the week's gone well. It's certainly been a busy and an exciting one here. We had the visit of the Prime Minister of the United Kingdom yesterday. Yeah. Today we were going to start off with a conversation about Nafta, the Canadian dollar. You might have forgotten because you're probably too young, but Nafta was the signature agreement of Bill Clinton when Bill Clinton was president. And I was listening to what President Trump was saying after that conversation where he was speaking to Enrique Peña Nieto, and Peña Nieto was saying, let's have some tequilas. But he was saying it was the worst deal ever. And I keep thinking to myself, do you just change the name, or is there some real negotiation going on here? I don't know, but tell us, it's had a huge market impact, hasn't it?
Yes, it has. So now, if I can just start about NAFTA, very small brief. So NAFTA is a trade agreement between America, Canada, and Mexico. So it's actually the world's biggest trade deal. It was supposed to kind of have free and fair trade between the three economies. So obviously can improve production and obviously employment in these three economies. So now that was cut some time back, like you said, by Clinton and all that. But last year, I think it was January 2017, Trump said that NAFTA is the worst trade deal ever. It's disadvantageous to America, and so that meant that the three trade partners are going to try and renegotiate NAFTA, obviously. And later that year, I think,
and neither of them were keen on renegotiating.
None of them.
Even Trudeau was not happy about it at all.
So everyone apart from Trump, was happy. But then Trump comes in and says, you know what, it's a bad deal. We need to renegotiate. Now, the advantage of negotiating for America is that they are the most consumers of NAFTA, so obviously that gives them leverage. So and then a year later, that is in August, Mexico, 2018, this year, Mexico was able to cut their renegotiations and kind of have it signed off, right?
So it's now signed off. That was earlier this week when he was trying to speak to the president.
Yes, and it hit the wires obviously that Mexico have got their deal with NAFTA. That meant that Canada was left out.
Yes.
Now that means that if Mexico in that deal and Canada are left out, remember the three of them are kind of tied to the hip. It's one huge trading bloc. Mexico and America. And
so there was pressure on Trudeau now to come and compromise. And
so now there's pressure. Actually, the deadline is supposed to be Friday.
Today.
I think it's today. The pressure is supposed to be on Friday. So now Canada are kind of trying to negotiate. There's positive tone, even if they've kind of lost leverage, because Mexico is in. So you're kind of left out of this, and the three of them are kind of tied to the hip. So a deal with Mexico and America won't work very well without Canada in there. So obviously, so it's going to be very positive for Canada and also for the whole trading bloc.
So tell us what's happening. Is this the Canadian dollar?
So this is the Canadian dollar. So by the way, before I forget, some of the terms of the deal was that American production vehicle production is supposed to be 75 done in America, and 45% of all the producers are supposed to have to earn, I think, $16 per hour.
Yes.
And obviously,
so a minimum wage as well.
Yes, a minimum wage, and also the textiles and raw materials, mostly metal, are supposed to come from America, a huge part. Mostly because they are the ones consuming most cars. Obviously, it makes sense, right? Yeah. So that is why obviously America is supposed to get a bigger deal, because in the end they consume the most out of after the production. So this is now the USD card.
Yes.
As you can see,
otherwise known as the loonie.
Yeah, the loan, yes. So yesterday we saw the dollar gained against the card. So we're kind of trying to see what happens in the negotiations if Canada are able to make the deadline. Obviously, I'm sure they will. I'm sure they have.
Would that be bullish for you, or you think that's already priced in now?
I think it's already priced in, but I think that the Canadian dollar is going to gain if they also get their deal in there. But Trump is positive for it. He's okay with the deal. They feel they're going to get a negotiation.
Historically, the Canadian dollar's had a very high correlation with oil.
Yeah, with oil, yeah.
But I think that whole NAFTA argument spoiled that correlation because, oil rallied and the Canadian didn't really follow.
Yeah, the oil rallied because of OPEC.
Yes.
Yeah, so that was kind of not, it was not a market move. It was not kind of pushed by the market. It was kind of pushed by policy, and OPEC kind of, holding oil and kind of limiting production. So also that kind of affected the correlation. Then we have, the whole idea of emerging markets and trade wars with China, and obviously the NAFTA, which kind of also changed the correlation again, because we have to think about. But once we're done with NAFTA, then you can now see the correlation coming back into the market. Now again, on trade wars also.
This is, you wanted to show us the Australian dollar.
Yeah, the Australian dollar.
Because that's your proxy for the Chinese.
So yeah. So that's my proxy for China.
Yes.
Yeah. So as you can see,
look at that. That's a big drop.
Yeah, it's losing because Trump said that he is willing to pull the trigger
on 200 billion.
Yeah, 200 billion worth of China trade with America. So that is also obviously affecting.
So people feel what commodities, Aussie gets hit because it's a proxy.
Yeah, it's a proxy to China. They do a lot of trade with China, so they feel that obviously that is going to affect, the Australian dollar. Now, funny thing about what we are seeing right now is that so we see Trump agreeing to Nafta and saying obviously we're going to negotiate. Then we see him saying that, you know what, for China, I'm going to pull the trigger on the trade war. So it's kind of mixed messages for investors who are kind of seeing, oh, okay, so Trump was going to negotiate NAFTA, so maybe he might also ease on, trade with China, but it's not happening. So it's kind of, mixed messages. We're kind of trying to see how that works out in the market.
So if you think he's going to go full-on trade war with China, this is the thing to sell.
Yeah. So, but the thing is this: China.
So let's say he goes full on. Would you expect that to be?
Yes. It is going to be very, very, very. What can I say? Bearish for the Aussie.
Yeah.
Yeah. So it's going to be a kind of a buy-off for the dollar. And remember, now we go back to the territory where we came. Where we came from, where you see the dollar was gaining across board. So you might go back there again. You see, but the advantage with that, or what we are seeing, is that even if we have that market risk, investors are still going for equities more, as opposed to going for things like gold. So we might get some funds moving out of maybe the dollar and going into equities, because they still feel that for indices like maybe the DAX, the German 30, the France 40, or maybe the Nasdaq, people are still bullish for that. Yeah. So you might
did our Nasdaq hit another record?
No, it's kind of just there.
It's stalled.
Yeah, it's stalled there. It's kind of stalled there.
So
yeah. After the market got kind of scared about the trade war with China going through, but I think we are still bullish for it.
Yes.
So I'm not sure. Do we wait for next week because we're going through the weekend?
Yes. What do you think? Because we've got a good profit here. We're up 2%.
2%. Yeah. 2%.
Yes. So shall we halve the position?
I'm not sure. So for me, I would kind of.
You want to leave it?
I would leave it.
Okay.
So I think we just leave it, see what happens over the weekend. This is the Turkish lira. As you've seen it, it kind of, it's trying to regain from yesterday. So the reason is that obviously the central bank is kind of charging more rates for dollar-denominated.
So they're making it more expensive to hold foreign currency.
Yeah, they're making it more expensive.
But then I saw yesterday that the son-in-law, who's also the finance minister, was interviewed in the FT, and he says the dollar's losing all credibility. And I thought to myself, it's not the dollar that's losing the credibility, it's you.
Yeah, exactly. I think what happens, it's kind of one-sided. But they're kind of making it worse for themselves with comments and all that. Yeah. And the good thing with America is this: even if Trump says something, they know that the Fed is very independent.
Yes.
So the dollar in itself will not lose any credibility given what Trump says.
That's a good point.
Yeah.
Actually, let's leave it with that.
But for them, it's not.
Lawrence, always a pleasure.
My pleasure.